Good morning. Welcome to this morning's MPC Markets morning call, 8th of August 2025. Stocks were lower last night on Fed and Tariff uncertainty. President Trump obviously making a few announcements last night around the Fed, and also on the positive side, Apple's willingness to start making some parts in America helped buoy the market and probably salvaged what could have been a pretty awful night overall. We had our market yesterday slightly lower, but not a bad effort again. Up 1% for the week so far. Asia was fairly positive. The Dow was down 0.5%. S&P was around about flat. Nasdaq was salvaged, as I said before, by that Apple announcement and a couple of earnings results. You can sort of see there really most of the market was pretty negative, but Apple and Nvidia, AMD saving the market a touch. Micron was up, so the semis were up there. Just on the back of that tariff announcement last night. The previous day, which we did talk about. So essentially the tariffs are going to be 100% if you're not building a manufacturing facility, manufacturing and producing in the States. So, and he will go after people retrospectively if they commit to it and then they don't do it, which I think is a pretty smart move. And overall, I would say a fairly negative night. Eli Lilly got belted there, as you can see, down 14%. Those weight loss drugs, the buzz is really coming out of those now. And you can kind of, we had Novo Nordisk get hit pretty hard. Not as bad as Novo Nordisk, so about half as bad in terms of the daily downturn, and that services sector there again looking a touch weaker. ServiceNow down, SalesDesk down, Autodesk, CrowdStrike. So Palantir still hanging in there, really positive, but probably just slowing down a touch. I'll have to ask Mr. Nader, but he's been fairly active with that position for us. As it starts to slow down, sometimes he does trim. But you'll have to catch that on the Global Alpha podcast, which comes out on Mondays. So, sorry, I skipped over there, and we will go now to. My mistake. We're working from home today. We're moving offices, so a little bit of technical difficulties this morning. Sorry about that. So we've got we've got earnings coming up next week, which is fairly important, but for Australia in particular. It started to slow down in the US. JB Hi-Fi and Car Group on the Monday. In the US we've got Monday.com on Monday. Which is more in that technology services area. It's a project management, HR sort of platform, which is growing pretty quickly. Oklo, which is one of my faves, it's the small modular reactors that recently did a deal with Liberty Gas. They're going to try and provide end-to-end power services for data centers, and the power will come from gas initially, while the small modular reactor technology starts to gets to a more commercial stage, which is still about probably 4 to 5 years away, depending on how the project goes. But as you can see there, Commonwealth Bank on the Wednesday will be massive, as well as Suncorp. Thursday, you've got Telstra and Pro Medicus, which is now one of the bigger companies in Australia. The ASX, which I assume can be nothing but disappointing after their TPG screw up the other day. Cochlear on the Friday. So that one, the analysts tend to get wrong quite often, and it does tend to perform relatively well because it usually sits at very expensive prices. But it's a slowish start to earnings. We tend to get everything out of the way in a month, and it's obviously 6 months worth of earnings. So it's a super busy time. Temple & Webster's one that I really like, which I've looked at buying 100 times, never quite got on. It always trades a little bit too expensive for my liking, particularly for the Australian market. Probably would have bought some had it been a US listed company. It's very hard to buy those high PE stocks in Australia because any smell of disappointment, they're going to be they get hit pretty hard. Treasury wines on Wednesday might be interesting as well. It's been really dour. Investor sentiment's been heavily against it. I think there's a short position in the stock as well, which is fairly significant. They did that $1.6 billion cap raise and takeover of Dow Wines in the US. I'd expect them to perform better than expected. I think there's quite a lot of misinformation out there at the moment from from the analysts, and I'm starting to realize, I'm starting to realize that less and less homework's being done on anything outside that ASX top 50, and a lot of assumption-based investment theses are out there, and then everyone's copying each other as homework, and it's really leading to, Telix is a good example. I wrote an article on Telix yesterday, and you've got top-grade analysts or supposed top-grade analysts in Australia saying there's going to be this massive class action, the SEC inquiry, they're going to be belted by tariffs, and all of it is like 1,000% wrong. Due to the nature of those radiopharmaceuticals, all of Telix's US-based drugs are all manufactured in the US because they have to be, because it's a time-sensitive thing with those radiopharmaceuticals. So that's just incorrect. That's what's wrong with that investment thesis, number one. Secondly, the SEC inquiries are very regular. The amount of them has jumped up because Trump's having a crack at the pharmaceutical industry generally. But these are routine inquiries from the SEC. They're checking their process, and they're double checking the transparency around their testing and their trials, which they absolutely should. We're talking about drug companies here. But it is a fairly routine thing. And then there's a law firm that started an investigation, and the Australian market's gone and panicked about it. And in all reality, these guys, they're predatory lawyers. Where I even ran through, did a reputational check on a couple of our AI systems yesterday, and quite hilariously, the newest version of Grok, which is the highest benchmarked AI around, actually, it was quite funny, categorized them as ambulance chasers. So it would be an almost automated thing where the law firm basically sees that an SEC inquiry is going a little bit slower than the norm, and this would be one of Telix's first, because they only just listed on the NASDAQ in the last 6 to 12 months. And they launched an investigation to try and squeeze. It's like a good old-fashioned mafia shakedown. And 1% to 2% of these things go to court, and usually if they go to court, it's still only a 59% chance of success. So we're talking under 0.5% here ever get, around the 0.5% mark ever remotely get to any sort of settlement. And but they do a high volume amount of investigations, and I'm sure they just, if there's an inexperienced board, particularly, someone like Telix would be a prime target because they're from Australia. The board would, start to panic and maybe try to settle a small amount out of court. But, but the whole thing is that the market's panicking about it. And then I had someone on Twitter last night say, well, what about their operating expenses being at 36%? Analysts were expecting 33% anyway. So the stock's fallen from $25 to about $17. And it's all on the back of just poor information. And that literally took me less than 30 minutes to go and find out all that information yesterday. Very similar to that ResMed situation where we're seeing those weight loss drugs, as I talked about before, the demand slowing. But ResMed got belted to about $20 back in October 2023. So we're only talking, less than 2 years ago. Here we are back at $45 for ResMed, and everyone was feeding off the fact that basically sleep apnea is going to disappear. And back then I wrote an article for Livewire saying we've got to look at the actual science here. Again, it had less AI in those days. Probably took me a couple of hours to find out that was absolute, tripe essentially. But it provided a very good buying opportunity. So look, so these sorts of things where, Treasury wine's going to be affected by tariffs. Well, they're not going to be affected by tariffs. They've got an operation in the US. and they've got operations in France and Europe. They've got operations in China, and they've worked out the system essentially where if they add 5% of local wine to a blend, they're immune to tariffs. So it's just yet another example of there's so much focus on CBA, which we know is overvalued, and there's so much flow straight into the top 50 due to ETFs. It's the research is getting worse and worse and worse for those companies outside of that top 200, and there are some opportunities there overall, I think. But look, what we have worked out is you're better off waiting for it to stabilise and missing the first 5 to 10%, as we did with ResMed and CSL back in 2023. But we made really great profits out of that. So just be wary. Do your own research. There's a lot of great AIs out there that can give very good answers in quick amount of time. But I would say at this stage, particularly in the Australian market, I'd be questioning the analysts more than ever before, because I don't think they're doing a thorough enough job overall. Looking at commodities now, obviously gold was up, silver was up 1.5% overnight. Crude's had a pretty rough week, down about 8%. And platinum started to make its way back. US dollar weakness overall. Obviously, the turmoil with the Fed. It's looking like Fed's wallet is going to be the replacement there. And obviously, movements. Putting someone in as a temporary Fed member is, and it really does. And they're saying it gives President Trump 5 months to choose a new Fed president. But I mean, that's just so happens to coincide with the length of his term, Jerome Powell's term. So overall that it will look like rates going lower. That's also to do with the economy softening as well. So that will see a weakness in the US dollar. The US dollar down 2%, and I did see an article last night saying global funds are the most negative they've been on the US dollar in over 20 years. We really are. I think that gold, silver and platinum, those sort of stores of value or precious metal trades will start to come back to the fore a little bit. We had lithium rally yesterday. I think the Chinese futures are up around about 6%. So the lithium ETF was up a little overnight and up 5% for the week. And uranium gave back a little bit as well. Apologies again, a little bit disorganised today just due to the office move, but corporate earnings for Australia and the US, Block was up 5% in the aftermarket, reported a rise in second quarter income and raised its expectations for gross profit on Thursday as the payments firm was helped by resilient consumer spending. They're up 12% at one stage. They're up around about 5% last time I checked, at about 8:15. Duolingo had an outstanding result, up 13%. DoorDash up 5%. Eli Lilly was down 14%, as we said. One of the previous Global Alpha Rex had a bit of a rough night. The trade desk down about 25%. It disappointed, but on the flip side, we had Datadog reported well, was up 12% early in the session, finished around about flat. Overall, might be some profit taking going on there, but an outstanding result for those guys. So the ASX, I expect a fairly quiet market today. Into next week's earnings, I think everyone will be focused on single stock. Earnings so far has been pretty positive overall, and we'll be probably watching the reaction from commodities around that lunchtime period as well. I think important number for China next week in industrial production. We've had a bit of a pattern of risk off on Fridays due to Trump, so I don't really expect that to change. But a lot of these tariffs are just being watered down, so you can sort of understand the general buoyancy in a fair bit of this. I think the next leg down, and I did say this back in May after we started to heavily recover from that April fall, that the next leg down will be on the economic numbers, and it's just taken a little bit longer for it to filter through than I thought. However, I'm not necessarily bullish at all. I think I'm still remain fairly bearish and would recommend moving towards cash over the coming weeks. But I think the fact that it's really going to be based on those payrolls numbers and Trump's made it very clear by firing that commissioner of the labour statistics that he wants a bad number so he can push the Fed to bring rates down lower. I'd be expecting a bit of a disaster for payrolls next month, and I think that would be, that seems to make sense as the most rational catalyst. So we may have a little bit more time to be getting back to cash, and or at least sort of drifting sideways over the coming weeks. So that's how we're generally going to be playing it here at MPC, and we'll be sort of sniping from the sidelines in terms of earnings. We haven't done a massive deep dive into what our general picks will be for earnings season, but my lack of faith in those analysts means that we will more than likely play it from the side of looking for quality companies that deliver decent earnings where the analysts get it wrong, like they have with Telix and a few other companies of late. So hope everyone has a great day, and we will speak again next Monday morning. For those of you who don't already listen, Bulls versus Bears, Jonathan Takadena and I will be out this evening or tomorrow morning for a wrap-up of the whole week, around about a 40-minute podcast. And obviously the Global Alpha podcast will be released on Monday as well. So they're all free. If you want to catch up on markets and get a little bit more US specific, or have a look at the broader macro environment, check those out. They're all on Spotify, Apple, iHeartRadio, and YouTube. Thanks for listening. We'll speak again Monday. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.